All right, Lane. Let's show you how to do a scan live here. Screener. Breakout play. You scroll over the tickers. See that one? You might think that's a breakout. No, too much relative volume. Okay. Same. This is what the volume you want to see. Like no volume, and all of a sudden, huge pop of volume. Same relative volume, huge pop of volume. But that would be a breakout over a red day. Obviously, the breakout here would be like 33 cents, so it would need to open 6 cents away from 33, so it would need to open at 27. Now it is showing that, like, it's showing today, where I don't know if you like the big green candle was yesterday, and it's showing today's candle because we've opened the Finviz today. Had we opened it last night, it wouldn't be showing that candle, that last candle. So you just don't pay attention to that last candle there if you open Finviz in the morning. Just FYI. So that kind of looks like that would be a breakout setup, but if you looked at IMUX last night, it would just be like, I'll show you. It would look like this without the red day. But because it's today, obviously you're seeing the red day. So last night, IMUX would have looked like this, and obviously that's not a breakout because it just broke out. AGFY. See, now I don't understand why you didn't have this one on your watch list. See the volume burst? There's zero volume behind it, and all of a sudden you get a big volume burst. Okay? And as you can see, big green candle, regular candle, closing near its highs. The high of this candle is what? Let's see. 115. You see the highs right here, it'll tell you. 115. So it needs to open. So you do this 115 times 0.2, 23 cents. 115 minus 23. And it has to have closed at 92 or higher. And you see it closed at 94. So today it needs to open at 92 or higher. What was the ticker? AGFY? AGFY. Look, and it's already opening up. Look in the volume. No volume. And huge volume. That's the key. Now you see breakout over a green day. That's a green day. No resistance. This is what you want to see all time. This is the chart. As you can see, all I need to do is open over 92, and it's at 97. So this also is a low float. And how I imagine how I'm going to buy it is I'll look at the day one. So I'll look at this day to see how it ran. That gives me an idea of how I want to play it. Now they're typically always the same. You wait for so look, first 5 minute high day, 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. So now you can buy over this high day since 5 minutes have passed. So you would buy at 58 cents, risking 52 cents, 6 cents. And it goes all the way to $1.13. 6 cents. So $1.13 minus 58 was your entry. So 55 cents divided by 6 cents is 9, one risk reward. So say you were risking $10 divided by 6 cents. You would get 166 shares. And then say you times that times 10. Or no, that's not how it works. 166 times 0.55. So you would make $91 risking $10, you see, on this play. So that's how you look at breakouts. Now I'm going to scroll over to the low floats real quick just to help you out. Low floats. All right. So it's starting off at the lowest float, and we max out at, we don't look past 25 million. So we don't scroll past 25 million. That's the max float for low float. Okay. So we scroll over it. What we're wanting to see is something that's really beat down, that has spiked, and almost looks like a breakout setup, but it doesn't have to be a breakout. Like, you can kind of see that this daily chart looks like an A, B, C, D. Here, I'll show you. Like, if we were just to look at this, like you got a spike, the A, the dip, B, another spike, C, another dip. So if you were to draw a line from here to here to here, it would create a wedge, you see. And so you can expect that maybe today Indo would be a good low float play. So you're kind of looking for that. And CRKN, that would be a good one as well, you see. Or actually, I'll do it on this so you can see even better. This is ideal, not very much volume, then big volume. But this is the chart you kind of want to see for low floats. Like, and when I say you want to be able to draw a wedge, look at this wedge on the daily chart. You see how it's kind of getting tight? It can just take off. So you might suspect today would be something. And another one. I don't really like stocks that gap down that much, so I try to avoid those. Drug could possibly be a play, but it only had 1 million volume. Like, I like stocks that have, Indo, it only had 800,000, so that's kind of one thing. Rev, that looks pretty good. Beat down, then has a big spike, could have continuation. High lag, same thing, like setting up. Sober, I don't know how you missed that one. And that's just a breakout setup over a green day. Look at that. Really completely missed that. I don't know how. So technically, we got a breakout here, 389. So let's just do the Gritani. 389 times 0.2, because it's a $3 stock or less, we do 20% has to open up. 4 or higher has to open up 10% or closer. 389 times 20%, so then that's 78 cents. So 389 minus 78 equals 311. So it needed to close at 311. Close at 305. I mean, that's close enough. Come on. See what I'm saying? Just have some common sense with it. All right, and I hope this helped you out here.